Alright, ladies and gentlemen, MrSotko here. Welcome back to the channel, and today we're going to talk about something fairly specific today, and that's Nvidia. So this is sort of my video to everybody on the channel, and also to Nvidia itself, but they probably won't watch the video, and that's okay. But then we got something else at the end that I thought was a really interesting article. But before we talk about Nvidia, I sort of wanted to read this article here that sort of sums up what I'm about to talk about, because Nvidia is lowering they're expecting lower revenue, and they're sort of complaining essentially about their lowered revenue, and I kind of want to put that not to rest, essentially, because it is true, but I just want to name the very obvious reason that that is happening to Nvidia, and then I want to mention a few other things that I think probably didn't help along the way. So cryptocurrency miners ignore the Bitcoin price fall and focus on expansion instead. So now this is about Bitcoin mostly, and the hash rate of Bitcoin itself, which, is really only done with ASICs. So it doesn't quite have a lot to do with Nvidia, but at the same time it does. So according to a report from Bitcoin mining, has reported remained profitable for some miners who have improved their investments and efficiencies in the space. And one of the indicators of this has been the increased hash rate. So it just keeps going up. And that's not really a surprise, because we have manufacturers like Bitmain, and then there's, the new Dragon Mint or something miner that's like 23 terahash or 22 terahash, and all of the S9 miners, or at least the latest generation, is 14 or 14 and a half terahash, whereas a lot of them before that were just 13 or so. But either way, they're just mass producing these, just beep, bop, boop, bop, bop, next, and so on manufacturing lines. So you could just say 14 terahash, 14 terahash, 14 terahash all day long, and all these manufacturers are doing it. So it's really no surprise that the hash rate of Bitcoin increased in that sense. But at the same time, with a lot of people not actually making any money off the S9 miners or these ASICs, it's a wonder that people are still mining at all. However, there's the good side to it is that, yeah, sure, you might be, breaking even right now, or you might be paying a few bucks in electricity extra, but maybe one day Bitcoin goes back to 20,000, and then all of that mining that you did, even though you were paying a little bit more in electricity and not making a lot of money at the time, it all paid off, because now it's all worth 3 times what you were mining for initially. So at the start of August 2018, reported that Bitcoin's network's hash rate had recorded an all-time high of 52 quintillion hashes per second. This ties in with a hash rate growth that started in late 2017 and has extended into 2018. So during this period, some of the larger players in the mining space strengthened their positions by investing in better hardware and setting up operations in countries like Georgia, which offer competitive advantages in the cost of power. So to ensure viability, most cryptocurrency miners are now expanding their capacities. And the industry could see increased investments, which help them operate at close to a break-even point. So it just goes to show, even in the article, they're like, well, if they expand their industry and get really efficient, they'll be breaking even. Yeah. So everybody's sort of feeling this. And before I talk about Nvidia here, I just wanted to show you guys this. This is just the Nvidia stock quote. As we can see, if you click on 1 day or 5 days, you don't really see anything too crazy. Sure, we were at about 260, 257 for those of you who are holding on to Nvidia stock, and now it's at 245. So, okay, so there's a loss there, and there's some more expected losses as, less people are buying Nvidia GPUs. So when we look at 1 month, we don't really see too much either. We did see a big increase, big decrease, but nothing too crazy. But it starts to become abundantly apparent that, Nvidia really isn't losing money here. They're not really, sure, they're expecting it to go down, as you can see, 4.9% over the course of a month here, and it's going to go down. But let's take it out to a year. And you can see, oh, okay, I see what's going on here. We used to be at 150 bucks in about August of 2017, and at that time Bitcoin was at maybe somewhere between 3,000 and 5,000. I have CoinMarketCap up, we could check, but either way, it was much lower than even what it is now at its lowest. So, and now we reached $266, $244. Sure, it's going down a little bit, but that's not anything unusual. it becomes even more so apparent that Nvidia is starting to get huge as you start to bring it out. Mining was always a thing since 2009, essentially. So when Bitcoin came out, but nobody really got into it until about 2017, about the turn of it, and that's when it really started to explode. Bitcoin was about $1,000 in January of 2017. By the end of the year, it's at 20,000, and now it's at 6,000. So it's still $5,000 more than what it was January of last year. So if you were at, if you were January of last year and you were holding on to it, and somebody said, "Hey, it's going to be $6,000 next year about this time." Well, even though it's sort of getting pretty late in the year now, but even after the crash, like, whoa, that's pretty good. Indeed, it is. So, even all the way back in 2014, we're only at $14. So this is really the start of the mining. 2016, it started to become a little popular, but really 2017 was undoubtedly the major year for Bitcoin and crypto. ICOs popped up everywhere. New cryptos popped up everywhere. We went from 1,000 to 20,000 in Bitcoin. We went from fractions of a penny in Ripple to $3.50, nearly $4. So it was crazy. And then, of course, it came down because of the hype. But as you can see, it didn't really hurt Nvidia at all. And the major explosion happened, you could see about December or so when everyone's really mass buying those GPUs. In the lead up to December and beyond. And even after the fall of Bitcoin, we can take a look at that a little closer here. Bitcoin began to fall on December 17th, and they're still going up. And I like to look at this max chart here too. As you can see, in like 1999, they were about $2, so you would have made quite a bit on this. Although the gains don't look as impressive, as crypto, but you would have made a lot of money. So I like this right here, and I kind of want to explain this little bump. I kind of want to explain that on World of Warcraft. I'm not sure what they were doing in that year. Maybe they just expanded operations, or they became just way better overall. But I kind of get the feeling that it's almost World of Warcraft right there. About 2005 there. And it just really exploded. 2004 or so, 2000 end of 2000, beginning of 2005. I think that's when WoW came out. I can't remember, but everybody's buying video cards for it. I'm just throwing that out there. Anyway, so now I want to get on to the article. So as we can see, the Nvidia really isn't losing stock price. Now, Nvidia doesn't just make money on their on their consumer GPUs. They also have workstation GPUs, and they have that box that costs like hundreds of thousands of dollars with GPUs just jammed into it, and has an impressive, impressive power. I can't even remember what they called that. I read the article on it a while back, but they also have workstation GPUs as well, like Quadros and Teslas and etc., that make them a lot of money. In fact, probably make them more money than just their consumer GPUs. Now, in December or so of last year, you couldn't find GPUs anywhere. Even in January, you just couldn't find GPUs anywhere. They were $1,300 for 1080 Ti's on whatever website, whether it be Newegg or Amazon. I've seen them as high as $1,300, maybe even $1,400. Some of you probably even seen them higher, because there just weren't any. And even if you went to the Nvidia website and they had a new batch of Founders Edition or whatever, if you didn't buy them that day, they were gone. They were out of stock, so just forget about it. So if you didn't happen to have the money in your bank account, you didn't happen to have the money on you at the time, forget about it. You just weren't getting a GPU. And now they're all over the place, and people are selling them for relatively the same amount. So Nvidia calls off cryptocurrency mining production amid low earnings. So it seems that Nvidia is thrown in the towel in the development and production of its cryptocurrency mining-focused graphics cards and chips. Nvidia has seen some explosive growth over the last few years. It's currently seeing a 68% increase in value in the past year alone. Although this week the stock price has slipped almost 8%. So Nvidia's biggest rival, AMD, also saw record highs. And Nvidia is especially successful riding the waves of huge cryptocurrency boom because it just sold out all their GPUs everywhere. They had no stock left. The cryptocurrency boom of November and December gaining an impressive 42% from November to an all-time high of 267 in June 2018. So that wasn't even that long ago. That's well past the bear market. Rather well into it, that is. Demand for its highest-end GeForce series GPUs surged as the price of Bitcoin shot from 5,800 to almost 2,000 in the span of a month, creating a buying frenzy. So the recent market downturn, however, has left Nvidia with a lot of unexpected extra stock due to fading interest and market sentiment, because a lot of them being returned, or the chips themselves aren't really being used by Nvidia, so they just have a ton of extra stock. Not necessarily just whole GPUs, but all the products that they were ordering. And so that's something I want to talk about as well. So Nvidia CEO Jensen Huang plans to trim cryptocurrency mining production out of the budget. In a conference call yesterday, Huang spoke about moving down new avenues and focusing on Nvidia's strengths for the remainder of the year. Our core platform exceeded our expectations, even as crypto largely disappeared. We're projecting no crypto going forward. So they're saying, you know, our core platforms exceeded our expectations. Okay, but you have to ask yourself, what does that mean? What are your core platforms? Is that your gamers, or is that your consumer GPU, professional level GPUs, your workstation GPUs? Is that your core platform? So that's a good question. But if their core platform is their gamers, I don't think it was gamers necessarily that went out and bought every single GPU off the shelf. Gamers just don't do that. I'm a gamer myself, and if you go out and you buy one good GPU, a 1080 Ti or whatever you prefer, and slap it in your computer, you're good to go for just about any game out there, considering there's not much better that you can buy except for maybe a Titan or the extremely expensive ones, which aren't really worth it. And, you only need one of them. Maybe two for SLI. The three-way and four-way SLI has been dead for a long time. That never really even worked that well to begin with on most games. It just led to tons of errors. It was kind of a pain, to be totally honest. Nobody does that anymore. So SLI at best. That's 2 GPUs at best per person. So if your core platform that exceeded your expectations was the 1080 Ti and the 10 series consumer cards, that was largely due to the crypto demand. You wouldn't have produced nearly as many had that demand not been there, because the gamer demand it's a huge demand. It's a huge market. But it wasn't as big as crypto. With crypto, you're going into Best Buy, or you're going to Fry's Electronics or Newegg, Amazon, anything, and you're just grabbing a fistful of GPU boxes and paying for them, hopefully, I guess, and then walking out the door with them. With gaming, you go, this is the card that I want. It's the new one. Instead of getting 40 frames, I'm going to get 70 frames. Awesome. And that's it. You don't need to grab a whole bunch of them. So it seems like they're really naive to this. And so they did sort of a bunch of other manufacturers essentially made the Nvidia P106-100, which is essentially a GTX 1060 with no display ports at all. So essentially you would just have one of these in your computer with display ports, some graphics card, that is, unless you're using your integrated, which is a possibility as well. And then everything else is just these GPUs that have no ports on them, and they just run when you open your mining software, Claymore or NiceHash or whatever you use to mine. That's what you use, and it just runs. It doesn't even need display ports, whatever. So that was the thing. They were a little bit cheaper than the actual 1060 Ti, but not by a long shot. You could buy them in bulk, and they were fairly mediocre. It was essentially a GTX 1060 on discount that has very low resellability. So in that sense, I feel that Nvidia is missing out. They could be creating some of these products or even more products in advance. Another thing that I think Nvidia did wrong was not release the new graphics card series. I think they were riding on the 10 series for a very long time. It was a good couple years that the 10 series was out and just starting to die out. And they could have made a new graphics card. They probably could have released it a while ago. And they should really stock up on those cards because they're going to get bought up very easily. And right now, they might not get all bought up immediately, but sure enough, as soon as Bitcoin gets back to the tens of thousands, 20,000, people are going to start firing up their GPUs. And not saying that people mine Bitcoin with their GPU, but if Bitcoin goes up in price, likely all the other altcoins that you do mine with your GPU is going to go up as well. And then that demand is going to go up, and they're going to be left with nothing again, and the price of the graphics cards are going to go to $1,300. They probably want that, but oftentimes they're not the resellers of those graphics cards. They sell them at MSRP, and then the other corporations sell them, and sure, prices go up on all things. A lot of people probably make money. But I'd say the people that make, the most money proportionately are the people that bought it at $600 and then sold it at $1,300. Double their money. So they're falling behind in that sense, and they're not really looking forward at it. They're not really looking forward and saying, hey, like, what if we made just some kind of ASIC GPU? What if we made more of our, what if we made, some P106 series graphics cards or this P series graphics cards? What if we made some specific mining GPUs that did not have ports? It would save us a lot of money. We wouldn't even have to put the ports on them. We wouldn't have to do anything with that. And it would be a separate production line. Eventually, we would make way more money printing these, but they don't, which is very interesting. It's I do believe that Nvidia is virtually a completely Japanese, or it could be Chinese company, but I've seen sort of a trend in that sense where some of these companies that have been around for a very long time, they don't want to change at all. And I'm not saying, hey, don't make gamer GPUs, don't make consumer GPUs. That's not the case at all. But production needs ramped up, even if the price of crypto is going down, because in 3 weeks from now, in 2 months from now, in 4 months from now, it could be back to $20,000, and everybody is going to want a piece of these GPUs, especially the new series. So just not doing too well here. Nvidia expects lower revenue due to demand from crypto miners, and stock price falls 5%. So it fell on Friday after the U.S. chip maker reported on Thursday revenue forecast below Wall Street experts' expectations. So that's not going to be good for investors because they're going to be wanting to sell because they know that the price is going down. It's just like crypto. They know the price is going to go down because of this bad news, and they're going to sell. So there's no reason to present this bad news to the public. You could just say, you don't actually have to forecast this to the public. They do a lot of speeches where they're like literally saying, hey, like, we're not going to focus on crypto, and that's lowering stock, and yet at the same time the people buying it are raising their stock, and people are buying into the stock because they like crypto and because they're buying their graphics cards and producing so much wealth for them. While at the same time, Nvidia is basically shunning all of those people that have brought them here. I just don't think that Nvidia's stock price went up that much over time, especially the explosion right when 2017 went around and everybody was essentially following YouTubers who were telling them, hey, mine on NiceHash, mine on this, mine on that, do this, do that, use cloud mining, and getting everybody into crypto. It's quite the coincidence indeed. And I've seen a lot of these companies. I think one company that comes to mind, from that region, essentially, whether it be China or Japan, and I know Nintendo is a Japanese company, but if you've ever noticed that Nintendo does not want to change, they really like to do the same thing for a very, very long time. They have these different brands that they've been running, Mario and such, that they just keep perpetuating over and over. And the sales just kind of barely get them by, essentially, anymore. They're just creating a less and less powerful machine every time they come out with a new one. I mean, the GameCube was actually a really good gaming system, but a lot of the games on it weren't so good. I mean, there was Smash, it was the Resident Evil remakes, and the Resident Evils for GameCube, which were great. There's a lot of great games on GameCube. I'm sure you can mention your own, but I'm not going to just keep going. But it was a really powerful machine. If it could run Resident Evil, the remake, and I remember playing that game for the first time, like, wow, this machine can run this game. Like, this is crazy. Like, this is one of the best graphics I've ever seen at the time. And And then they come out with the Wii, which every game was absolutely nerfed on it. Even games like crappy games like Guitar Hero were absolutely nerfed into oblivion on it, and the graphics looked terrible. And every game you played that was cross-platform, it ran like crap. It was a goofy machine. Smash Brothers was pretty alright on it. Always is. It's such a great game. And the Wii U was even worse and had really bad sales. And they just keep doing the same thing over and over. They're trying to cater in this new weird way of this mobile game system that most people just don't care about. And I think the PC revolution is actually sort of really, really catching up past consoles. It was always more powerful, but I think like the sentiment of PCs is growing greatly. And the Wii U is just garbage, and they just can't change the way they're doing it. They have to come out with this new Wii with this goofy mechanical system, basically targeted at kids and I don't even know who else. But either way, I think Nvidia's not particularly doing their business very well in the crypto field. Sure, crypto price is going way down, so they think to themselves like, why should we make a bunch of crypto miners, or why should we like overstock ourselves when obviously people are just sending all this stock back to us. And part of that reason why they were sending stock back to it, which was another thing I wanted to get into, is the fact that they haven't released the new graphics card series. So everybody's been mining, and everybody's competitively mining, all with the same graphics card, all with the same 1080 Ti's or 1070s or 1060s, and they're all trying to mine with these same series of card that hasn't changed in years. But if the 11 series had come out, maybe people would be less inclined to send back their 1080s and 1180s, and it would essentially just add the new series, or just replace it and then sell that one just via third party or something like that. So that's a reason too, is because crypto prices are going down. It's become very relatively unprofitable. It's just barely profitable at this point. And if you had an 1180, a different series, or or you call it the 2080, whatever they decide to call it, I can't remember. But the whole difference would be maybe 50 cents or $1 a day per card or something like that, depending on how powerful the next generation is and how fast the RAM is and how fast you're going to be mining with them. I should have probably looked up the new cards. I think they announced them now. I looked up some speculative specs, if you will, speculative specs. Say that one 10 times fast. But for the most part, just really weird what Nvidia is doing. They've been doing it for a while now. Very strange. So CoinMarketCap at 212 billion, and as you can see, price of crypto went way down from 20,000 to 6,400, but Nvidia stock did not. So people are still mining, and people are still waiting on the new graphics cards, and hopefully some other things as well. So this is an interesting article. It says Bitcoin ETFs are a terrible idea by Andreas Antonopoulos. And I thought it was just a really good read. Announcing this week he intended to burst the ecosystem's bubble because of Lambos and to the moon and all that. One of the most respected thought leaders in cryptocurrency, Andreas Antonopoulos. I thought it was me. Oh well. Revealed he believes Bitcoin exchange-traded funds are a terrible idea. The author of The Internet of Money and the seminal Mastering Bitcoin does think Bitcoin ETFs are coming. He also suggests Bitcoin ETFs mean a kind of financialization that runs directly counter the entire point of Bitcoin, specifically cryptocurrency in general. I wish I could pose in front of a server like this. What are those? Are those miners, or is that just like a server? Like, what's the point of this? Like, I wonder if you asked him in there, like, hey, what's behind you? He'd be, oh, I just came here for this pose. I want to pose like that. So whoever's got one of those facilities, get me a sweet picture around that. So he says, I'm actually against ETFs. So he remarked during his brief video, from mainstream enthusiasts, those who hope that Bitcoin Core adoption, the exchange traded funds, because this is a Bitcoin.com article, mind you, so they have to say Bitcoin Core on it every time. Whenever you refer to Bitcoin Core, you should be referring to the Bitcoin Core wallet. So like all like one phrase, Bitcoin Core wallet, not necessarily Bitcoin Core for BTC. That's a Bitcoin.com for you. The exchange-traded fund holds almost a mystical appeal. The ETF is also thought to be key in the next immediate price run-up. So supposedly ETFs are going to really make the price run way up. But at a price. It's almost like meeting the devil at the crossroads. And he's like, yeah, sure, I'll make Bitcoin go to 20,000. Oh yeah. But you know, there's a price. There's a price to be paid for that when the mainstream gets into it. For retail investors of the traditional variety, ETFs present a nice way to hedge against risk without the bother of housing the commodity. ETFs then are custodial arrangements, repackaged, fund is created, and shares of the fund are sold. It has been a clever way to invest for many retail users. And you know, when the ETFs come, the mainstream really comes, when the Wall Street money, and I'm just generalizing there, when the Wall Street money does come, it's going to be, again, it's more like a too much of a good thing. You know, too many people mining is, you know, a lot of people mining is good for security. I think there's a mosquito or something. Too many people is good for security. You know, a lot of people is good for security, but it also makes sure that all the funds get distributed very, very slowly. And, you know, when the price goes down and when the difficulty goes way up, we're in a situation like this where you're getting like $1 for your 1080 Ti a day, which is just like terrible. So, you know, too many people on any one thing is a bad thing. And, you know, the investment world, you could kind of consider that. I think I got him. I'm not sure. You could kind of consider that way too many people because it's just few people, but with a lot of money. But, you know, Bitcoin talks with money. So a lot of people, let's say. You know, it's just like if you're on the highway and you're like, man, this highway is real slow, I'm going to take the back way. And you realize, hey, the back way is really fast. Look at this way. All I got to do is go up this side street real quick and boom, I'm there. But then everybody else is going to realize that pretty fast too. Everybody else is going to realize, hey, all I have to do is go up the side street. And then guess what? That side street is now clogged with traffic. It's like a really good restaurant out in the middle of nowhere. And then once it goes mainstream and somebody posts a Reddit of this restaurant that everybody just has to go to and everybody goes there, and then you have to wait in a line to get into to the restaurant, you know, that's a bad thing because now it's just so crowded, it's loud, there's so many people screaming and yelling and people throwing glasses and wine bottles getting broken over your head. Now it's not a very good place anymore. It's too much. Is not good. So meeting the devil at the crossroads for the increase of price of Bitcoin. Proposals for a Bitcoin variation would essentially involve something similar. It will have a manager who will offer a fund of Bitcoin, which will be sold like shares. Essentially, reserves, you know, shares will be sold as they might traditionally through a standard brokerage account. It's a custodial reserve system. So excitement over ETFs in the Bitcoin community stems from the impact that they had on gold. A few years ago, the gold prices a few years ago. So essentially the price of gold languished for well over a decade. Once introduced as an ETF, the price took off. So the prospect for Bitcoiners has only become more enticing as the crypto bear market deepens. So it might be what takes the price of Bitcoin to the moon. But, you know, again, at a price, they're going to own all the Bitcoin at that point. And there could be problems with owning all the Bitcoin, like forks. That's a major problem that not too many people talk about. Because then if you were like, hey, I'm going to introduce a fork and make it real popular, and you had, you know, like 10% of all Bitcoins, that means you'd have 10% of that new fork. And you'd be able to kind of control that or make a lot of money doing that. A Bitcoin Cash. Mr. Antonopoulos' first concern is over the nature of price manipulation and the ETF itself. So whatever commodity trading within the ETF scheme is subject to worldwide price swings by larger market makers, he believes should Bitcoin become part of that genre, the same, maybe worse, will follow for its price. So he realizes he's going to burst a lot of bubbles by saying that, but Mr. Antonopoulos believes ETFs are a terrible idea. Top reason why, he explains, is arrangement. A Bitcoin ETF is going to be a very large custodial holder of Bitcoin. Through shareholders, I'm all messed up today, will own slices of Bitcoin ETF. They are not in ownership of Bitcoin proper, he explains. In order for that to be the case, a person said to be an owner of Bitcoin, they have to hold the private keys. Essentially, he who holds the keys holds the Bitcoin, owns the Bitcoin. So holding Bitcoin proper allows all sorts of flexibility in practical terms. If a holder wishes to exchange Bitcoin on a formal exchange, he can. And if he or she further wishes to pick up forked coins, they can. And so on. Mr. Antonopoulos believes that an ETF would change a fundamental dynamic of Bitcoin. the ability to vote as an owner by making the above decisions instead. And though the ETF would have many customers, it's solely the ETF that will make the decision about fork coins and so forth. So he references the August 1st fork of last year, the one from which Bitcoin Cash extends. During that time, the ecosystem had to wait to hear from exchanges on their terms, how or even if they would accept the fork. So those with Bitcoin parked on an exchange had no say. They were at the whim of the exchanges. This phenomenon would be exacerbated with ETFs in the space. So another problem is centralization. The fund manager now becomes the gatekeeper, a centralized office to which governance can be impacted disproportionately. Shoring this won't be the end of Bitcoin. It does warn that it will cause price manipulation and manipulation of debates regarding how Bitcoin functions in the future. So he believes also that the inevitability of another fork, Bitcoin ETF related companies could very well break off themselves and forms what he calls a corpo coin, or a corporate version of Bitcoin. So that's a big problem, because if you own so much Bitcoin, if you're an ETF and you have millions, billions, you can own so much Bitcoin that you could essentially create a fork, which anybody can do if you really want to, although most likely it's not going to be particularly popular. But if you do make it very popular and you happen to hold a ton of Bitcoin on hand, you're going to have a ton of the new fork, and you can essentially just create that coin, and then you would own the majority of that coin. And now you have this corporate version of Bitcoin, which could just confuse the system, and just create another Bitcoin Cash scenario where somebody's trying to get you to believe that it's the real Bitcoin, even though if you fork off something, if you're going, this is the original, and you fork, this is the new, this is the new coin, but this is still the old coin, the real coin. Whether if all the developers go to that new coin, this is still Bitcoin, and that's now Bitcoin Cash. So if Bitcoin Cash took over all of the hash rate and the price, congratulations, Bitcoin Cash. But it just didn't. Nobody wanted to do that. Just take a look at Bitcoin versus Bitcoin Cash: 560 versus $6,382. The hash rate is nowhere the same. Nothing about it is the same. The GitHub of people working on it is nowhere the same. It's just nobody wanted it, and that's okay. It didn't do so good, but it kept its market cap, probably most likely through manipulation, but who knows. But that's just about all I have for you guys today. I just wanted to talk about how I kind of think that I'm not really too excited about Wall Street investment into Bitcoin, because I know it's just not going to be a good thing. Like, if you think just because the price is going to go up, they're really looking out for us. They're bringing up the price for us. No, they're taking all the Bitcoin. Like, they have it all. Like, I mean, it's kind of like the whole, Bitcoin was kind of blowing up around the whole Occupy Wall Street movement, and that was long after Bitcoin's creation, but sort of in the middle, and it blew up, and everybody's saying, go Bitcoin, go Bitcoin, go Bitcoin, be free. But now the world is into Bitcoin, and now there's too many people on one good thing, and investments are coming, and regulations are coming, and governments are stepping in now. And before, governments didn't care. They probably barely knew it existed, or they thought that it was just gonna be nothing. People rarely talked about it. They only talked about it when the price absolutely crashed. And everybody's like, oh, get away from the one percenters, and watching Wall Street executives drink champagne while they watch everybody protest around them. That was deep, deep irony. But anyway, either way, too many people, not a good thing. And, if you think Wall Street is going to do good for you, just because the price of Bitcoin goes up, no, they're going to take all your Bitcoin. They're going to make it much more difficult to reobtain if you ever sell it or anything like that, or for new people to obtain as well. So it's really not, a huge, incredible price increase is not always just the greatest thing. But I hope you guys enjoyed it, and I'll see you guys next time.